All right. So the United States has continued its quantitative easing policy or strategy in order to lift markets and do what it can to blunt the impact of the COVID-19 pandemic on its economy. But what the U.S. does has ramifications for the global economy with respect to how markets have been reacting and whether or not the United States can continue to keep its low interest rate environment, which it has right now. Jerome Powell, of course, has said that the fiscal side can only do so much and that the monetary side needs to support things, which is why the U.S. is still in talks with respect to its second stimulus part 2 for COVID. So exactly how does this impact the global economy and in particular Nigeria? If the U.S., for example, was to raise interest rates, what would happen? Would we see capital flight out of Nigeria back to the U.S.? Joining us to discuss this is analyst at financial derivatives company Pelumi Osode. Pelumi, good morning to you. Thank you so much for joining us. So, in spite of the impact of increased quantitative easing, price inflation in the U.S. has been tepid. The announcement that U.S. inflation is at an 18-month high, it's moved markets. What would be the impact of a sudden increase in the U.S. policy rates on the economy and global markets if that was to happen?
Okay, so you agree with me that a lot of things have happened this year, so many unprecedented things we have seen. And for the United States, they've had a stable economy for quite a number of years since the last recession they had in 2008, and the economic growth has grown at a pace of 2 to 3%. But what we saw this year, based on the unprecedented happening, the global pandemic, the lockdown policy of government, we've seen a lot of changes, in even unemployment levels, falling about 22 million people, between March and April lost their job in the United States. And also we saw that economic activities contracted both in the second and the third quarter. And also we've seen a lot of stimulus packages. All these activities actually raised money supply in the economy. And theoretically, we know that as money supply increases, we expect that price level also increase, and except, of course, if there is increase in economic activities in the country. But as we can see in the United States, even investors, they're already jittering, looking at like 18-month high inflation rates, although this is still below the 2% anchor that the Fed has said. But having that said, the other flip part is that the Fed has made it clear their policy direction that in this time they want to raise employment level, they want to reduce unemployment, and at the same time, foster economic activities. So, in my own opinion, I don't see U.S. policy interest rates, being increased at this point, because they even, according to the press meeting that they had early last month, the Fed chairman also stated expressly that they have the capacity to, allow, inflation increase to over 2%, which of course 2% is their anchor. So for Nigeria, there's nothing to be afraid about, and to the global economy generally, I know investors are actually speculative of increase in interest rate that will affect, capital movement and all that. So in the near term, I don't see the Fed raising their interest rates. Rather, they will keep it low to ensure that there is increase in employment levels and also there is increase in economic activities.
All right, thank you for that. So I want to talk about the relationship between former Fed chairperson Janet Yellen, who's coming in as Biden's Treasury Secretary, and the current Fed chair Jerome Powell. I would say perhaps they have a cordial relationship. So since there's an alignment of the goals and consistency of the policies between the Fed and the Treasury, since it's crucial for the world economy, how and what do you expect to be the implications of the relationship between the two, between what they do and how it impacts everyone else, like us, for instance, in Nigeria?
Okay, so yes, President-elect has already announced that Professor Janet Yellen will be the next Secretary of the Treasury, and we expect a cordial relationship between the Yellen and Mr. Powell, which is currently the Fed chairman. Of course, we need to know that Yellen was the ex-chairman of the Fed, and also she's an economist. Mr. Powell is actually a lawyer, and we also expect that. And in the last administration, everybody expected that Trump would re-elect her to be the Fed chairman, but we saw that he actually elected someone differently. However, these are professionals and these are renowned economists who they are people that are actually highly professional. So we expect a cordial relationship. We do expect a frosty relationship, and we expect policy coordination, and we expect policy synchronization and policy alignment between the two of them. Also, we've seen studies, empirical studies have established by, some has established that, the Fed is actually an independent institution, and we know that the Fed is actually chaired by Mr. Powell, and the Fed, which is the Federal Open Market Commission, is actually a group of people, and they use monetary policies, to stabilize the economy, while the Treasury use fiscal policies to stabilize the economy. So what we expect is a cordial relationship rather than individual bias or what have you. So we expect a cordial relationship that will drive both the United States and global economy to recover from this pandemic and everything that we have seen in this year, and see how the economies of the world, both emerging and developed economies, come to a place of stability in the next year.
All right. So if I bring things to Nigeria now, do you think the relaxation on controls of international remittances and DOM accounts, receipts of those, will have a positive impact on Nigeria's balance of payments? And if so, why?
So we have seen this move by the CBN, to relax, what was placed on remittances and foreign inflow through remittances, and we have seen improvement in the forex market. The reason why this was done is actually to increase liquidity in the forex market. We have seen that dollar has been supplied, and as we see theoretically, as we know rather, as when supply increases, we expect the price to fall down, and we saw that there is a reduction in exchange rate in the last 2 weeks. Closing at November 30, we saw that exchange rate was at the parallel market was trading at 500 naira, while 500 naira to $1, while at the official window we were seeing it trading at around 386 naira. But we have seen significant that was a large divergence. We have seen improvements. Dollars is trading at the parallel market right now at around 470, while at the official window we are seeing it trading close to 380. So we have seen a lot of improvements, and we are seeing convergence towards the unification of the dollar of exchange rate rather, as the central bank has stated that they are working towards unifying the exchange rate. So we have seen improvements in this regard, and we hope that as more remittances is coming in and more dollar is supplied into the FX market, we hope that there will be a lot of improvement and towards unification amongst other policies that the central bank is actually crying out at this time. All
right, and finally, our Nigeria's external debt, it's about $31.5 billion, it's almost 32. As far as an increase if we were to see an increase in the U.S. Policy rate, which you don't think will happen, you've already said you don't think that will happen, but if that was to occur, what measures, can you explain what measures should be taken to cushion an effect of the outflow of that happening?
So I would say right now, we as in Nigeria, we are sort of safe, looking at the 2021 budget, the impact of we are sort of safe because most of the loan that we have received so far are concessional loans that are long-term, over 40 to 50 years with low interest rates, which we receive from international financial institutions like the World Bank, IMF, and even African Development Bank. Having received aside that, our external debt also is sourced domestically, and from international organizations, international other foreign countries. For domestic sources, it has no direct relationship with the U.S. policy rate. And as I said, and you also reiterated that there is likelihood that there won't be changes in U.S. monetary policy rate. But if that happened, we would see that would mean that Nigerian government has to increase their interest rate to even attract investment in the first place, and that would be actually detrimental looking at the state of the economy. However, in the short term and looking towards 2021, we don't expect that to happen. And looking at the policy review that we have seen both in the fiscal stance and even the monetary stance, we expect that there will be improvement in what we are seeing right now. Looking at the deregulation of the pump price, looking at the cost reflective tariff that we are implementing now. If all this have actually changed the sources of revenue and increased revenue, if we have a corresponding change in government expenditure pattern, we will see significant impact and we won't be bothered about US increasing their interest rates in the short term.
All right, great stuff. Pelumi Osode, Senior Analyst at Financial Derivatives Company Limited. Thank you so much for taking us through those scenarios and seeing how things work out if the United States was to increase its benchmark rate. Thank you so much.